My name is Lucy Scott. I'm editor of the international cross-border property magazine, Property Week Global, and I'm very happy to be here today to discuss the investment market in Romania. I'm joined on the stage today by 4 expert speakers on the market. To my far left is Jochen Sieber, who is CEO of RedServe, which is a consulting and project development company specialising in the development of large projects and in Romania, as well as Eastern European countries such as Croatia, Serbia, Slovakia and Ukraine. To my immediate left is Christopher Berlu, who is a managing partner at international law firm Salens, who is a specialist in international real estate, M&A, corporate and capital markets, and has advised global and regional clients in transactions across Central and Eastern Europe. Since the crash, he's been advising clients on loan restructuring workouts, broken joint ventures, and acquisition of distressed debt portfolios. To my immediate right is Martin Schaefer, who is managing partner at Cole & Partner Vienna and Bucharest, and Cole & Partner Tourism Consultancy International, which is a management consultancy group specialising in Central and Eastern Europe. He is here to talk about advisory, hospitality projects and tourism in the region. And to my far right is Ilias Papadioudis. I think I've got that right. Probably not. And he's CEO of More Real Estate Services, which is a Romanian brokerage firm set up in 2004, and to date has been involved in 430 million euros of transactions, valued 300 million euros of properties, and served over 200 clients. To communicate his experiences about the real estate market in Romania, he launched a highly popular blog a few years ago, and is it this year? This year published this book called Romania Through My Eyes, which is a collection of stories and posts about his lessons and experiences in Romania. And apparently there'll be some copies of this at the end for anyone who's interested in the book, and possibly Ilias will sign a copy for you if you wish. Anyway, so Romania. What I want to discuss today is how the real estate downturn has affected the Romanian market, especially the impact that the economic difficulties have had on the country. And our speakers here are hopefully going to shed some light on this and talk to us about the opportunities that the downturn has created to invest in Romania in the future. Just to sort of set the scene for anybody who doesn't know much about Romania, became a member of the European Union in 2007, and people were very excited about this. This was going to bring about huge changes to the investment market. And it did. The market became highly attractive to international investors. We had people like Africa Israel, Degi, Natixis entering the market in 2007. And in that year, a record of investment transactions exceeding 1.5 billion euros, 78% more than that registered in the previous year. Yields compressed rapidly. In that year, French financial group Natixis bought an office building for 5.5% yield, which is an amazing price. So that's the past, but what is the present, and what is the Romanian market? What is the future for the Romanian market? Christopher, what do you see? What do you see the market? How have you been experiencing? What is your experiences over the past 18 months?
Well, it's no secret to anybody who follows the Romanian market. I'm sure that probably applies to everyone in this room, to one degree or another, that the market, the real estate market, has taken a nosedive in Romania in the last, really the last year or so, maybe a little bit, year and a half, and in tandem with the decline in the Romanian market, the Romanian economy in general. At this time last year, I wasn't here at the panel, but I know one of our colleagues, Ilias, was. And at that time, there was still a great deal of optimism, notwithstanding the general negative feeling at Expo Real last year that maybe Romania was going to escape the worst of the downturn. That proved not to be true. It was a bubble. and it popped. It turned out to be one of the biggest bubbles in the region. And of course, the bigger the bubble, the longer and deeper the fallout. The market in the last, well, since late last year, middle of last year, has essentially been frozen. Their banks are not lending, with very few exceptions. Equity investors are not investing, with a few exceptions, but unfortunately not enough. And there's kind of a blockage, and the blockage seems to be caused by two main factors, as well as some other peripheral factors. The main factors being that there is not enough liquidity. As I said, the banks are not lending, and they're not going to most likely start lending again until they clean up their balance sheets with all of the bad loans that they are now carrying.
Are these Christopher, are these international banks or domestic banks, or is it a mix?
Most of the banking sector in Romania is owned by international banks. There are some locally owned banks, but they're quite small and not heavily involved in the sector. So mostly it's what we're talking about is the Romanian subsidiaries of major international banks. And until they can start the process of deleveraging and cleaning up the bad stuff on their balance sheet, they're unlikely to start lending in any great volume. And the other problem is equity investors who really are poised to come into the market. There's a lot of money, I am led to understand, billions in fact, earmarked for the region, and including Romania, to take advantage of distressed asset opportunities. But there's a gap in pricing expectations. The investors are interested in much lower prices than the owners want to consider selling for, and most likely that gap is going to remain until the distressed buyers, who are really the targets of all the equity investors now, become truly distressed and are willing to lower their pricing expectations, and that's only going to happen when the banks when their lenders get tougher on them.
We'll come back to the banks in a second, but Jochen, would you like to just describe to the audience what you see, I mean, just to elaborate more on what Christopher was saying about the blockage in the market in terms of development projects and what's going on there?
Yeah, Christopher said optimism of Romanian people or Romanian partners, business partners, enthusiasm and optimism. This has been the main characters for business partners in Romania, and this was pushing the business or the development projects. So it's more trading them than developing. Also, we needed 4-8 weeks for due diligences. During this process, the properties changed twice the owner. Because it was fast trading, not developing. That's not developing. And it was until, I think, 6-9 months ago, and then stopped financing, as Christopher said. And our approach is now, and the approach of our partners and investors is set out one project which could be developed within the next 6 to 12 months, lower the price of retail tenants, for the tenants, for the office tenants, try to get smaller or shorter contracts, and then reduce the expectation of the project. Just start with a smaller one. Do not towers anymore. Just reduce to a acceptable level, which also is necessary to get it financed.
I mean, in terms of the sectors, can you describe which ones have more, are more oversupplied than?
I think sectors and regions is very important, because Romania exists on Bucharest, everybody is talking about, and then the rest.
Yeah. I mean, what percentage of the investment market does Bucharest account for? 80% or?
Bucharest is comparable with other capital cities, but what I think the secondary cities or the region all about needs much more developments, also larger developments or logistic developments, much more than Bucharest. Everybody is focused on Bucharest, pricing is focused on Bucharest, and the expectations are focused on Bucharest, and that's totally silly. That's a gap between Bucharest and the rest of the country, 50%, 60%. And the expectations for pricing in the rest of the country was also based on Bucharest levels. And this changed now, slowly, very slowly, because if it starts with the first project which could run, optimism and enthusiasm of Bucharest people or traders or also our investment partners, which are owners, start, it's going on. It's going again, we got financing it again. And that's not the way. You have a lot of restricted financing by the banks now. And if a big mall is financed in Bucharest, this is gapped by the financing international partners. So you lose a lot of free money in the market.
Which banks are willing to lend? I mean, who is in the market?
Oh, that's the most difficult question in this, I think. We are negotiating for a mall project since 9 months with 3 international banks, and it's not finished yet.
They're clubbing together in one deal.
Yeah, it's one deal.
Yeah.
It's just consortium. We have to put them together. Even the banks do not trust each other to do it under one leading bank. So we have to put them together.
Are these again, are these domestic banks or international banks?
International bank with domestic subsidiaries, of course. It's not possible to make a deal with more than 50, 60 million euros with domestic banks. You need the international partners, and the country limit for international banks is reduced extremely. So it's very difficult if one project is financed, or a second one in Bucharest, of course. First it will be financed in Bucharest. Forget these banks for the next 2 years. That's the situation now, and therefore smaller projects, because in smaller projects the financing is also domestic possible, and the expectations of rentings or of income is decreased, and that's the most important thing. For a developer which looks for quality in projects, it's really difficult time now, because you have to reduce the expectations of quality, and I do not like to do this.
Obviously you mentioned retail. I mean, in terms of the consumer spending and the impact the economic difficulties are having on the consumer market, I mean, how positive, negative do you feel about that retail sector going forward?
So for retail sector, it's for the developer, the retailer is the partner, not the consumer. And as long as the retailer believes in the consumer and in the consumer expenses, we believe in the retailer. I recognize in different countries, also not only in Romania, also in Serbia or Croatia or Slovakia too, the expenses decreased, but not as much as in other countries or Western countries or expected. So the retailers are, the developers or the investors have to